a rent of 1 naira, only 10 naira. What the non-interest banking is actually saying is that you must do something economically viable, something economically viable to earn a profit. So rather than talk about lend money in non-interest banking, they actually talk about either a sale, a lease, or a partnership. To the extent that such a sale will be the subject of the profits you will earn, and then such profits can be distributed to the customers. So this is the way it is. And most people misunderstood the concept initially in the country, and that was because of all the issues that it had at the beginning. But going down the line, with more people having knowledge in the area, and some of the players doing a lot of passing a lot of information to the public, we've been able to move to what I call this second phase of the industry.
Okay, I'm going to ask you much more about that later on the show, but let's still talk about, I mentioned the fact that there was some challenges that actually,
there were challenges,
hit the non-interest banking in sector. But you've spoken so much about the way businesses are conducted in terms of lending and deposits and all the rest, but then you know that there's also the issue of skills and technical capacity. Has that also been addressed? Because you just said yourself that you learned how, as in you did most of your investment learning and education in
the
conventional way, that's the interest banks. But this is a non-interest bank, and it's something that people have to learn all over again, because it's really different from the conventional method that you're used to. So has there been improvement in terms of skills and technical capacity?
Definitely there has been. Some of the institutions who practiced Islamic banking in the last 7 years thereabouts have joined in, and also there's a roundtable conference. People are actually doing a lot of trainings, and if there's one particular area of banking that people desire to understand the most in the country now, it will be non-interest banking. And you find courses almost every month. There's a course in Islamic banking, and some of the operators to the regulators have brought in a lot of capacity to teach the public. In fact, I remember I was at one in Yola to teach the press about the industry, and for them to throw questions to the experts and be able to see the sense in the area of investment. So regarding capacity, we've gone really far. And if I'm talking about issuing an Islamic bond and it's already done, it's an indication, and also saying that all the technical experts in that program were Nigerians.
Let's look at the size of it. The size of the industry, that's the size of non-interest banks in Nigeria. Is it where it should be, or are we getting there, or we've not even started at all?
Right. The prediction is that in the next 5 to 10 years, Islamic banking is going to claim close to 50% of the global financial market. And so we will believe that Nigeria, with a significant population of Muslims, and now starting with a lot of institutions in that area, there is a possibility that we'll be getting close to that. Globally, the figures are clear. Globally, the amount of money in non-interest banking is $1.5 trillion US. So it's not an industry you want to just wish away. And if you also look at the fact that this type of monies only move into economies where they desire development, because you need to actually sell or build an infrastructure to access those funds, then it becomes very interesting. So I'm one of those who believe that regarding our industry, we could see a situation whereby non-interest banking will actually capture up to 40%, taking note that the central bank has made it clear that they have opened up faith-based banking in this sector, and that any group who wish to introduce such a product into the industry will be allowed to and will be supported in the regard.
So what kind of model do these non-interest banks adopt to fund their operations?
Very interesting. We have the similar things with the commercial banks. So first we have our capital from the owners of the companies. Then we have customers. And for the non-interest banks, there are two sets of customers. In terms of the investors, two sets of investors. Those who just want to give money and say, I'm keeping my money here. Whatever you have, I will take for putting my money with you, and it has to be non-interest. And there are some of those customers who are willing to actually take a risk with the financial institutions. So they actually partner with the customers of the bank at the back end. So when an opportunity arises, if somebody has a project to be funded, the bank could use part of its own proprietary monies and could also use part of its customers' monies. That's why a case was made that when you look at this type of banks, when you're talking about capital adequacy, some customers are actually risk takers in the non-interest bank. So,
well, how is such risk managed?
Interestingly, some of us that you see in this role, I was in conventional banking for 14 and a half years. And my main business was risk management. In fact, I'm a fellow of the Institute of Loan Management. And we don't joke with these things. Why? We go a step further than the conventional because most of the time we ourselves are taking a risk on money. And I'll give you a very good example that is very clear globally. Hurricane Katrina. People were buying homes with conventional loans. And the hurricane came and swept off all the homes. Now, the customers went to the insurance companies to collect, sum assureds. And they were told that this is a natural disaster and it's not covered by insurance. And they went to the banks. And they went to the banks to say, hey, look, the homes are gone, but we're still owing you. And the bank says, you will still pay. So the guy loses the home, he still has to pay for a home that won't be his. So in that regard, you'll see this is conventional banking. In terms of banking where you look outside the monies and you're looking at dealing with the transactions, at that particular point in time of the hurricane, you'll find that the bank will have some of its investments in the house, because it would own the house first before selling it to the customer. And at that point, you now have to adjust on who has lost something. Okay. So to that extent, when you're doing non-interest banking, your risk management needs to be exceptional. And this is the role I play in the institution I work for.
All right.
Yeah.
So in terms of risk management, how much of that have we seen? Because, you know, there's always issues of people defaulting on loans that they take.
Yeah.
But if you know, with what we have, sometimes that the bank goes into partnership with people and all of that. Has the risk management been as much or as low as expected?
Yeah, it's not. You won't say it's low. It's business and it comes with a risk. It's risk. I should also mention to you that part of the risk management is an advantage here in non-interest banking.
Why is that?
I will explain to you. The first risk you have to deal with as a lender in banking is whenever you give out money, the customer must use the money for the purpose. And that's usually the first risk. I mean, stories have been told about governments who take monies and rather than develop the countries, they've gone to spend on wars. In non-interest banking, because the subject matter of the transaction is the delivery of that infrastructure or that car or that good, you find the financial institution being responsible enough to ensure that that good is delivered. So that is one of the areas of risk management that where non-interest banking supersedes the conventional, because it actually, and in fact, it is known that the value at risk in an investment in non-interest banking generally is lower than what obtains in the conventional financing, because there's always an asset at the end of the day to point to.
But then if you have all of this seeming advantage over the conventional banking, why haven't we seen a higher influx of customers coming to these non-interest banks to take out loans or take out facilities to fund projects or their businesses?
I have seen an influx. I sit at the desk and I handle these transactions. For 14 and a half years, I've done leases in conventional banking. And the customers I have now in non-interest, when they do leases, they don't want to go back to the conventional. And the truth about the matter is that globally, the growth in the space is put at 20% per annum. It's the fastest growing sector of the financial industry worldwide. And you find countries like the US, Germany, with population of Muslim less than 0.2%. South Africa is coming up with its own bond next month. It is growing. Yes, an Islamic bond. And it's going to be about think it's about 750 million US dollars. So